The CattleFax Outlook session is always one of the highlights of the annual cattle industry convention. This year, a packed room gained some insight into what lies ahead in the markets for 2015. Let's take a look and find out what's in store.
2014's cattle market was one to remember, but according to the experts at CattleFax, it may be one that cattle producers won't see again for a very long time, if ever.
The markets are going through some adjustment now, but that's really no surprise. You know, we had a perfect storm in 2014. We had a 4-pound drop in per capita meat and poultry consumption in the U.S., and that's really what spurred these markets all to record high prices. And now you're seeing pork production increase, poultry production increase, and that's going to offset a slightly smaller beef production level in 15. So an adjustment, markets are still going to be very strong, but it won't be one-sided like it was in 2014. That doesn't mean we won't be profitable. We can still be very profitable. We just have to approach it a bit differently.
Still, at the CattleFax Outlook session, there were plenty of reasons for cattlemen and women to be optimistic. Analysts told the capacity crowd to expect fed cattle prices averaging in the mid-150s, which is slightly higher than last year, with a range from the 140s at the lows to near 170 at the highs. A lot of this is thanks to record high beef demand, and U.S. beef exports could set new highs in 2015.
It's incredible to see the growth that we've seen in the value of these beef and beef byproduct exports. Since 2003, the value to each and every animal in our inventory is $175 a head. 2014, it's $352 a head. We're growing at the rate of 6% a year, so that's a great story. And the markets are differentiating. They're wanting more and more of U.S. products. So I think that's a huge opportunity for producers as we look at the next 2 decades.
Another factor that might influence beef demand is the recent decline in fuel prices. Not only does it provide some relief when it comes to input costs, lower fuel prices also means more disposable income for consumers to purchase beef.
You look at it on a per driver basis, there's as much as $500 to $600 more per person disposable income. So we should see that play out in the food service side here over the course of 2015. I think that'll be a real positive in helping stabilize our beef demand.
Even if the market highs for beef cattle are already passed, you can expect price volatility to be an issue throughout the year.
These swings are incredibly wild. You know, we're seeing $8 to $15 hundred swings every 2 weeks in this market as we go through this adjustment. This has been going on for 6 months. I don't see it changing anytime over the next 6 months. So as you look forward in here, producers are going to have to really put the risk management hat on. When there's a margin out there, they got to capture.
Things are going to be, a little up and down, but fairly good for the next few years. I think it's a good reminder he's got that we got to keep an eye on our costs. Don't let our production costs creep up on us, take all our profits away.
Although cow-calf producers will remain in the driver's seat for the year ahead, Block added that growing supplies of cattle and beef over the next few years would go a long ways towards normalizing prices.
That's what we need to do. We need to stabilize our herd. If we're going to stay in the middle of the plate or in the center of the plate as an industry, we got to grow. We have to respond to this economic signal, and we're doing that.
Reporting from San Antonio, Texas, I'm Brad Bullough for NCBA's Cattlemen to Cattlemen.